This is Jay Martin.
Let's do some introductions for anybody who's not familiar with who's sitting on stage with me today. 30 seconds or less. Tell us how you spend your time. Let's start with you, Jeff.
So I work with Mike Maloney at goldsilver.com, write for Silver Chartist occasionally on miners, kind of do my own thing on Twitter. So a lot of blast, a lot of fun. It's a blast. So I'm really enjoying it.
Thanks, Jeff. Brent.
Yeah, Brent Cook, longtime exploration geologist, worked all over the world. I was Rick Rule's analyst from 97 to about 2003, I believe. Started an investment letter called Exploration Insights, which Joe Mazumdar took over about 5 years ago. And right now I just advise a few companies, invest my own money, and travel around looking for new discoveries, and in between playing volleyball.
I think you've missed this conference 1 or 2 years for a volleyball tournament, if I'm right.
I did. There's one in Mexico I usually go to.
Rick, over to you.
Rick Rule, allegedly retired. I'm down to about a 45-hour week now. Celebrating retirement with a new business, Rule Investment Media. I have no idea what I'm going to do with it. Maybe young Jay can help me. And for my sins, I'm starting a new bank. So those of you who aren't happy with your current banking relationships, which I assume means all of you, keep in touch. We'll be here. We want your business.
All right, so we're going to go around the horn, and what I want to hear this morning is their best ideas at the conference, right? So companies they're going to be looking at, commodities they're very excited about, ideas they feel are worth consideration. Before we jump into that, just a broad question for the panel, and anybody can take this. If you follow macro, there always seems to be a gold bull market right around the corner, right? And right now is absolutely no exception. So talk to me a little bit about that. Why do you think right now, right, we're not seeing gold respond the way we might, given the chaotic circumstances?
So Jay, I'll turn it around to you. You're a smart guy, young guy, but you'll get over that. In terms of this gold bull market, did the gold price fall from like 1970 to 1870, or going back to 2017, 2016, did the gold price go up from 1100 to 1900? In other words, I think we're in a gold bull market. I think people's expectations are that the gold bull market is stair steps to heaven. Most people have a 2-week or a 3-week inclination when they live in a 10-year world. From my point of view, we're 4.5 years into a gold bull market, not 3 weeks out of one.
Okay, I love that. I'm glad you took that one, because this is an investment conference, and I'm an investor. Everybody up here is an investor. However, so frequently, we get triggered by financial media headlines that are written for traders, right? They're written on the day-to-day events or the week-over-week events, and they can mislead you greatly, right? Media is made for traders these days, not for investors with long-term outlooks. So the first question should always be, what's your time horizon? All right, let's just go around the horn here, and I'd love to start with you, Jeff. You're back at the VRIC. I know you want to save some of your stock picks for your keynote speech, which is later today or tomorrow. But what are you excited about, and what are you looking at?
So I am focused on about a dozen companies right now that I'm just pouring almost all of my investment dollars into. And yes, it's still a gold bull market and silver, just because lower prices for me don't determine whether the bull market is over or not. It's not a lower price issue for me. Are the fundamentals still in place? And if they are, and these are big picture fundamentals, right, for gold. So that invites, that's an opportunity. It invites me to continue participating aggressively in the gold bull market. So, and a good example is 2008. Prices crashed in 2008. Prices crashed during COVID in March of 2020, right? And yet if you bought then, every technical signal back at that point was it's a bear market, the bull market's over, right? But I bought in March of 2020 and literally cleaned up. So that's the big picture, my response to your first question. So, but I am going to give the companies for gold and silver that I'm really focused on in my talk tomorrow at 11:20 a.m., I think. But the other market that I'm really excited about is uranium, and that's a bull market that is already in place. And yes, those prices have come down just like the others have, right? But I'm really focused on that for lots of fundamental key reasons. Supply, demand, the political support is growing, it's global, and now there's going to be a Russian, there's going to be a ban on Russian uranium. It hasn't happened yet. They've done it for oil and gas, but they haven't done it for uranium, but that is coming. That is a done deal. It's going to happen. There's widespread, major political support from every party except for a very tiny minority of people. So that's coming, and that is going to really lift and make the U.S. and Canadian uranium companies very, very attractive, because they're going to ban that. 50% of all uranium for the U.S. comes from Russia and its allies. If we ban that, imagine what that does to supply. In fact, when they were trying to pass the ban, a lot of these utility companies were whispering in the ear of the senator saying, hey, don't pass it too fast because we still need Russian uranium. I mean, think about that. They're still reliant on Russian uranium, and yet the ban is coming, it's going to happen, and so that's going to make U.S. and Canadian companies all that more attractive. And so for me, for a couple people that are here, a couple companies would be Uranium Energy Corp, Encore Energy. Those are two very large holdings for me personally. And the reason is because they're also in that pre-production sweet spot, right? So not only are they going to be more favored because of a ban that's going to come whenever it comes, but they're also going to be, both of these companies are going to be in production next year. I also like Boss Energy. They're not here, but that's a uranium company in Australia. I have a fairly large position in them. They're in the same spot. They're going to be in production within a year. So, and of course, I think Fission is just an automatic buy. That's a good company to own. And then probably the last one for a little more speculative would be Baseload for me. So I'm really focused on, uranium and gold and silver. I'll have my very top picks tomorrow morning. But in uranium, those are the ones I'm really focused on right now.
I love it. I love it. And we have our uranium forecast this afternoon right back here at 4 o'clock. So don't miss that. All right, Brent, over to you.
What's interesting to me is that virtually every mining company, junior and major, are down 10, 20, 30, 40% over the past few weeks. So it would appear there's, anything you buy is a buy, but I don't buy that. I think what you really need to do when you are talking to companies out there is, number one, it's going to be really, really difficult to finance anything unless it's really high quality and proven out. So if you're looking at a junior exploration company, find someone who's got money and is ready to go, or, unless you want to get in on financing. Companies that I own at this show that I saw quickly walking through here, certainly Liberty Gold with their deposit in Idaho and Utah. Those are good oxide deposits, good companies. They've got in the order of $34 million in the bank, 3 or 4 rigs drilling right now, all permittable. A little tiny company that I like the looks of, but they need to raise money, is Headwater Gold, focused on exploration in Nevada. Good guy running it. What else is here? I haven't looked through the list yet to know exactly what's here. I can tell you on Monday I bought Go Gold, which has a very nice deposit down in Mexico that's growing and getting bigger. And I bought Radius Gold, which has discovery in Guatemala and 2 more going in Mexico, all funded by partners. And in Australia, yesterday I also bought a nickel company called Centaurus, CMT, which has a very, very rich nickel deposit in Brazil that is permittable. So that's what I've done recently.
Okay. Thank you, Brent. And you touched on a key point. Often the most important resource that these companies can have is cash. Rick, over to you.
So in terms of what excites me, I guess 3 themes. The first thing is that with the prices falling, my life gets better every day, gets easier. The truth is, if you like the sector, and I do, you want stuff to get cheaper. And it's certainly accommodating me. I know for some of you, that's damning the market by faint praise. But for me, the money's always been made in the discrepancy between price and value. The value doesn't seem to change much in the 4 to 6 week time frame, but if the price does, it's better to see it lower than higher if you're an accumulator, which I am. What I like about markets like this where people are afraid is they take leave of their common senses, which is to say all of my competition seems to unilaterally disarm because of fear. We've talked a lot on this stage over the last 20 years about Pareto's law, the fact that some people are better at things than other people. And in a market like this where people are afraid, the best people sell for the same low multiples as the worst people. It's up to you whether you have the courage in a down market to take your losses on the bad people and reinvest the proceeds in the good people. That's what I'm trying to do. And maybe for the first time in 2 years, somebody on the exhibit floor from a good company is going to offer me a private placement with a full warrant. For the last 3 years, 4 years, 5 years, 10 years, I don't know, the company's costs of capital have been stupidly low, which is to say the terms on offer in private placements have been so lousy from a check writer's point of view that I've been frozen out of the market. And I'd love to refill my warrant bank. Jay, congratulations on the 73 companies that I currently own or are in partnerships that I manage. You have 19 of them here. So there's a very, very, very good crop of companies from my point of view. I'll be talking about all of them, I hope, in various workshops. I would simply point out that if, in terms of my own portfolio concentrations, when the best companies begin to sell cheaply, I have less inclination to take risk when the less risky positions become cheaper and cheaper. So I find myself, perhaps as a function of my age, erring towards the higher quality rather than the lower quality companies.
I love that. And actually, what you touched on, the individuals, I heard you say this, well, actually, because you said this on my podcast. You said, Jay, I would have made 10 times more money and worked a tenth as hard as I have if I had only ever invested in the same 3 or 4 people over my career. So I want to poke you for a name or two, Rick. Any entrepreneurs out on the trade show floor that catch your attention right now?
Well, I mean, the easiest thing for me would have been, and I didn't do it, of course, I wasn't disciplined enough, if I just hang out with the people who made me money in my 20s and 30s. The Lundin family, Bob Quartermain, Robert Friedland, Ross Beatty, Clive Johnson. There were sort of 10 people who made me a lot of money in my 30s. And if I had ignored everybody else, there would have been a few that I missed, but I wouldn't have done any work at all. And I would have made a lot more money. There are some young up-and-comers in town. Amir Adnani, who is a friend and sponsor of yours, who I think, certainly in terms of understanding finance and understanding promotion, is a guy that didn't just learn the lesson, he's basically teaching all of us old guys new lessons. Certainly Nolan Watson and the team at Sandstorm are new legends to watch. But the truth is that the old legends are still here and they're still cheap. I see Ross Beatty's companies exhibiting with you, Lumina, Luminex. So yeah, the Lundins, of course. If you have the opportunity to hang out with Lundins, do it.
No doubt.
I
Jeff?
want to make a comment on the people. So I hear this all the time. Somebody will say to me, Jeff, did you see that drill result of XYZ? And I'm sure you guys hear this all the time too. And if I'm not familiar with the company, the first thing I ask is I don't explore what that drill result was. The very first thing I ask is, okay, who's behind it and where is it?
Right.
And you have to look at those things first. If it's a company who is run by a CEO who last ran a marijuana company and it's over in some war-torn part of Africa, I don't care too much what that drill result is. And that's just me, that I will miss some big gains because of that, but I'm going to take much lower risk. And so that's why people are so important. And so when I hear about a drill result, those are the first 2 questions I'm asking. So
I love that. And Brent, I mean, you're the geologist on the panel. So do you look at the rocks more than the people, or how do you approach this?
That's a good question. I think what I do, I look at these drill results every day, something new comes in. And I'm more interested to start with in what's the context of that drill hole and those assays. What does it really mean? How does it fit into the big picture? So I'll go to the website. If there's a 43-101, go through that to get a sense of what this system is any good. Is this a re-drill? Is this an old tired project that's been around, through 6 iterations? That's where I go first, and then I'll go to the people, because that tells me a lot about what the results really mean. So that's where I go second, probably, is what is this project? What does it look like? What's the potential? And who the hell's running it? Do I trust these guys, or do I know this is some sort of bullshit re-drilled project that isn't going to go anywhere? So I'll go second there, and then I go look at the cash, and then if it all looks good, I'll see if I can get a trip down there and actually look at it on the ground.
Got it. And important to lean on individuals like Brent, who publishes a letter. Now, Joe, I suppose, writes this. But for investors like me, I'm not a geologist, I'm not a mining engineer. I can look at resumes, though. I can look at track records, and I can read people. I talk to people for a living. So that's my edge. That's my competitive advantage. Anybody can have that competitive advantage, stick with the right people, and then leverage the right resources, like an Exploration Insights, for example. Now, my last question, we got a couple minutes left here. I opened up today, I don't want to say cautioning investors, but just saying the most important decision you can make is find out how to stay in the game, right? Warren Buffett has 2 rules. Number 1, don't lose money. Number 2, don't forget rule number 1, right? The venture market wipes people out. And I would say that if any of you have done one thing exceptionally well, it's you've survived good markets and bad markets, right? And if we invest in this sector for 50 years, that means we're going to experience probably 14 serious corrections or outright bear markets. So any advice for the audience right now as they're venturing in the spec market, how do they survive long term?
Bear markets are sales. Bull markets are traps. You make money buying low and selling high. You can't buy low in a bull market. You can't sell low in a bear market. Take your instinct and do exactly the opposite. Have the guts, as Buffett would say, to be a brave when everybody else is afraid, and for Christ's sakes, be afraid when everybody else is brave.
Love that.
I would say cash, and I say that being fully upfront that I'm breaking my own rule right now. But if you have lots of cash, you can weather through something. The other issue for me is, okay, is the bull market really over? I'm looking at the big picture. If it's still intact, then I just look at low prices as low prices, buying opportunity. That's how I view it. So if I felt differently that, okay, gold and silver are really sort of at the end of the rope here. It's time to move on to something else. The bull market's over. Well, then I have to exit, and maybe even exit for a loss. But I don't believe that. There's too many crazy fundamentals that are supportive of them going forward. The Fed being one. The Fed thinks they're full of hawks right now. They're chicken hawks. They're going to chicken out. They are not going to raise rates that much more. It's going to happen maybe 2 more times. In fact, I'll bet you the Fed funds rate doesn't even get to 2%. And it's 0.8% right now. In fact, if it gets to 2%, I'll shave Rick's head.
Why bother?
Look at the big picture fundamentals. There's no way I'm leaving the gold and silver sector right now. So it's conviction, it's opportunity, it's cash. That's how I handle it.
All right, I will host that haircut right here in January, for sure. Brent, anything you'd add to that?
Yeah, well, I'm on today at 10:30 at number 4, going to be giving some tips and tricks to interpreting news releases. In my view, the hard thing I learned was, if your thesis is such and such, and that starts to go wrong, bail. Get out of it in these junior exploration stocks, because when your thesis goes from X to hope, you 9 out of 10 times lost your money. And it's probably worth pointing out that Warren Buffett would never invest in this sector either. This is way too risky, not what he does. But I think by sticking with an investment thesis and understanding what a company is looking for and what it needs to progress their theses and keep it going is what's really key to making money in this sector, is knowing when to sell, when to add to it. That's been key to me.
All right, I appreciate that. We're going to wrap this panel up and on to the next. Please give my panelists a round of applause.
This is Jay Martin.